What's going on? Welcome back to the channel. So today I want to talk to you about Opendoor. They recently did have their earnings, and I've received quite a few requests to cover some of the things and documents that they put out. So I want to go over all that, but first make sure to hit that thumbs up. And with that, let's get right to it. And on a side note, my apologies for the timeliness of this video. So whether you watch it in the morning or whenever you see it, hopefully you'll get some utility out of it. So there was a lot of documents that they submitted after hours. A 144 S8 prospectus, 8K, 10Q, and another 8K. I didn't look at the 10Q quite yet. I will be doing that in a following video, but I'm not really in any hurry because even leading into Opendoor's earnings, I already knew that Wall Street wasn't really too focused on a lot of the key metrics. It was going to come down to solely the future guidance. And Opendoor, they're doing a lot of different things. So that's one of the main reasons why Opendoor is going down a little bit. But in case you missed their earnings, they did beat on the revenue, missed on earnings per share. And I feel like the future guidance, it was kind of positive. I think generally we kind of knew that Kaz was going to hype it up, and he's very innovative, has a lot of big plans for Opendoor. But one thing that Wall Street does not like is dilution. So starting off with this S8 right here, this is associated to ESPP, so Employee Stock Purchase Plan. And so they are registering some stock. So 124 million there, additional 13 or rounding up to 14 million. That's part of their 2020 ESPP. So this is dilution. It's not dilution like straight away. They will be doing it over, was it like a 1 year period or a 3 year period? So in general, it is what it is. But Wall Street, the way they work is if someone says, hey, we're going to be diluting or registering stock, they count it as you're doing it now. So this is one of the attributing factors why Opendoor did go down after hours, because right now you can kind of see that technically the outstanding share count is 735.95 million. So if you are registering roughly about 124 plus 14 million, that's a good amount of dilution. And then plus you tack on another innovative thing that they're trying to do, then that's kind of why you went down. So the other thing that did come out was a 144 did signal a officer, this individual right here, sold 5,000 shares. It wasn't for tax purposes. It was a straight up sell. And the reason why it was submitted when it was is clearly this individual needs money desperately. And the reason why I can kind of tell that they needed money desperately is typically insiders are, unless they have a part of their plan, I think it's 10B5 or whatever it was, their trading plan. So unless they announce it in advance, there's a blackout period. And so insiders cannot sell or buy any stock until they unveil their earnings. So this individual clearly wanted to get the money, and this is why they did it pretty much on the day of their earnings. I don't really see this being a crazy reason to panic over because it's only 5,000 shares and everyone needs money at the end of the day. So let me know your viewpoint on that in the comments below. But one thing that did come out that's causing some people some kind of not really understanding why they did it is this, a prospectus. And so in this prospectus, they are issuing warrants. And so this kind of highlights it in a very easy to understand way. So ultimately, for every 30 shares that you have, they're going to be giving you one of each series. So a series K, A, and Z. And this is going to be warrants. Each of these series is going to be converted at a later time for one common stock. So they made it very clear. They're trying to say that, hey, this isn't dilution right now. And they're kind of accurate, but it is going to be dilution. And no different than what I just mentioned about the ESPP. Wall Street sees this and is counting it as dilution. So at the end of the day, it is what it is. It's very innovative. And I think the reason why they're doing this is to kind of go against shorts. A lot of companies have done similar type of dividends, whether it's actual common stock or in this case, like a warrant or a preferred stock. I've seen a lot of stocks kind of do that, and it kind of works in some cases. Although, to be fully honest, I think Opendoor, even I've seen Kaz kind of point and poke the bear a little bit, if that makes sense, against shorts. Like Opendoor's 22% short interest. It's not significant. It's not 60%. So I feel like them trying to target and get shorts off their back, like that's not the reason why they are going down. Like maybe in some days, but constantly, I think it's just the macro condition. That's what's kind of looming over the market, and Opendoor as well, not shorts. So even today, shorts did return about 181,000 shares. So that might be the reason why they are doing this kind of warrant issuance, because it is a dividend. So anyone shorting, you pretty much have to pay out of pocket for that. So that's kind of a common strategy that, again, some companies that are heavily shorted like to do. One thing why I don't like this is that a lot of institutions that might actually be investing in Opendoor long term, they don't want a dividend, right? Because a dividend technically is going to be taxable. So yes, you get these warrants, but you are also taxed on it. And depending on your tax rates, like it could be, and plus depending on as well what account you have your Opendoor stock in, it could be very sticky. So I've been very cautious about this. One stock that I did a couple interviews on the side note with the CEO, and they did this as well, ticker YHC, so LQR House. They did a dividend way back in the day. Obviously this is a bad chart, but yeah, they did it back in, I think, 2024. And even at that stage, like it did work momentarily to get shorts off their back, but it was a temporary patch. I think ultimately after people did receive the kind of preferred stock, they just up and left. So I think this is a very interesting type of thing. How this is also structured is the warrants are pretty much exercised at certain prices. So it is kind of meant to like benefit individuals holding long term. So for instance, warrants, the K series has a conversion price of $9, series A has 13, and then 17. So ultimately, if Opendoor gets to, let's say, $82, as what Eric likes to say, you can convert your actual series, your warrants, for 9, 13, and 17. So you can make some pretty good money. So I think how Opendoor is trying to kind of sell this idea is that this is free money, when it's not really. So it's a very interesting thing. These warrants will be tradable. So once you actually receive them, you can actually just kind of sell them straight away. So again, there's going to be that thing that might work out for some individuals. But yeah, I don't know. I'm kind of cautiously optimistic about this, only because, again, based on my history and dealing with companies that have done this, it doesn't usually work out. But I think having the structured conversion price of 9, 13, and 17, it might incentivize some holding and might temporarily get shorts off of Opendoor's back. So I just wanted to kind of pop on. I'll do a following video over the next couple of trading days about their actual earnings, so I'll kind of cover that. But like I said, I wasn't really too worried about that. It was going to be the future guidance of the earnings. That's what Wall Street was going to pay attention to. So I think people just had questions about the warrants as well as this right here. So the issuance of for the ESPP. So let me know your thoughts on that in the comments below. And then over and above all of that, you do have this right here. So the company's diluting, just straight up dilution, and this is at a conversion price of $6.56, and this is going to be meant towards paying off their 2030 convertible note. For those of you maybe not on this channel but other channels, I actually target and call out companies that have convertible notes, because especially if they don't have a capped call on them, because that is just death, like a massive death sentence. So Opendoor doing this, I think, is very advantageous for the company and its shareholders long term. So even though they are diluting quite a lot, so keep in mind there is the ESPP that they're registering, which is going to be dilution down the line. They're diluting 180 million for this at a price of 656. That's going to be going towards paying off the 2030. So dilution, and then the warrants, which technically isn't dilution now, but it will be. Wall Street's going to be counting all of this as dilution. And this is why ultimately Opendoor is at the price action, or at the price it is. So let me know your thoughts on Opendoor. I know this was kind of a lot to digest, and this is probably why people were just like, what the hell is going on with this stock? So let me know your viewpoint on Opendoor. Don't forget to hit that thumbs up. And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, especially as well. A lot of the swing trades I just posted today, they are some pretty hot bangers. So pop over there and take a look. Link in the description below and also the comments. With all that said, appreciate all of you watching.